Let's get some common sense from Craig Bolanos, the co-founder of VestGen, as well as a wealth advisor. Craig, inflation is changing consumer sentiment and consumer spending. How much does that matter to investors?
We live in a consumer-driven economy. So paying attention not just to data, but also taking a gleam from sentiment surveys is going to feed into the investment direction that we drive for bespoke results for clients. And yes, Angela, in a world where people are becoming, you know what I would say, Angela? In a world where people are becoming a little bit more choosy, they're becoming a little bit more intentional, that leads to investment thematics as driven by high inflation and a K-shaped recovery in the U.S. economy.
What are some tips to lean toward companies that can withstand a slowdown in consumer spending, or picky spending, as you say?
Well, yeah, I think what you need to be really careful about is when you're investing, especially in environments like this, you want to be in those businesses that are cash cows, businesses that have tremendous free cash flow. I think what probably keeps me up and worry at night would be any of these middle of the road businesses. And when consumers are going to be more picky, anything that's mediocre in brand, in value proposition, it's probably going to get left behind.
It's so fascinating, Craig, that budgets are tight, but people are traveling. What about investing in some of those stocks?
No, I think there's been a shift, and this has been a cultural shift throughout America in particular over the last 20 years, where we've transitioned from a society that was so focused on stuff to a society that's more focused on experiences, memories, storytelling. So I don't think that just because there's a part of the U.S. economy that is losing its discretionary spend, that doesn't mean you should avoid T&L, travel and leisure stocks. I just think you need to focus on those travel and leisure stocks that are great brands, that have wide moats, that generate tremendous free cash flow, because they're going to continue to do well, even if the majority of the discretionary spending is coming from the top end of that K.
Any thoughts on investing in retail?
Well, I think, everybody knows that retail has been shifted. In fact, this concept of omnichannel in particular has really driven tremendous change. And look at some of the retailers who have executed, I don't want to say flawlessly, but executed above everybody else. I mean, look at Walmart. Look at how Walmart has really gone ahead and taken leadership and command, not just through the bricks and mortar, but through their online digital presence. And there are other great retailers that are looking to copy and imitate just that. So I think, again, if you focus on great companies of America, companies with rising free cash flows, companies that reward their shareholders with dividend increases, and you too follow the consumer trends, you can build portfolios that are not just tested in the trenches, but they're tested for the durability standards of a changing and fragmented U.S. economy. If you want to learn how we do it professionally at VestGen Wealth Partners, connect with us online at getretiredstayretired.com.